We're at the start of 2026, and almost no one realizes that one of the most important economic systems of the last 50 years has already begun to unravel. For decades, your savings, your salary, and your cost of living were quietly supported by a single rule in the global economy. Every barrel of oil sold on Earth required US dollars. That rule made the dollar powerful. It made America dominant, and it allowed the United States to live far beyond its means. That rule no longer exists. There was no emergency announcement, no warning from politicians, no serious coverage in the media. But when oil no longer needs dollars, those dollars don't disappear. They come back home. And when they do, inflation, interest rates, and America's standard of living begin to change permanently. This isn't a prediction. It already started. This is the story of the petrodollar, how it was built, why it's breaking, and what comes next. The petrodollar didn't exist before 1974. Let me show you how it was created. The gold standard collapses. In 1944, the dollar became the world's reserve currency. It was backed by gold at $35 per ounce. Other countries held dollars because they could exchange them for gold anytime. But by the 1960s, America was spending more than it had. The Vietnam War, social programs, trade deficits. Other countries started demanding gold for their dollars, and U.S. gold reserves were draining. In August 1971, Richard Nixon ended the gold standard. The dollar became pure paper currency, no backing, no anchor, just faith in the U.S. government. This created a problem. Why would other countries keep holding dollars if they weren't backed by anything? America needed a new system to keep the dollar essential. They found it in oil. The 1973 oil crisis. In October 1973, Arab nations cut oil production and embargoed the United States. Oil prices quadrupled overnight. Gas lines stretched for miles. The American economy seized up. By early 1974, the embargo ended. But the U.S. government realized something critical. Oil was the most essential commodity in the world. Every economy needed it, and Middle Eastern countries, especially Saudi Arabia, controlled most of it. If the U.S. could tie oil to the dollar would remain essential even without gold backing. So they made a deal. The 1974 agreement. In June 1974, Secretary of State Henry Kissinger traveled to Saudi Arabia. He met with King Faisal and negotiated an agreement. The terms were simple. Saudi Arabia would price all its oil sales in U.S. dollars, not their own currency, not gold, dollars only. In exchange, the United States would provide military protection, weapons, and security guarantees to the Saudi royal family. The Saudis agreed, and they convinced the rest of OPEC, the Organization of Petroleum Exporting Countries, to follow the same system. By 1975, virtually all oil traded globally was priced in dollars. Why this mattered? This wasn't just about oil. It was about currency dominance. If every country needed dollars to buy oil, then every country had to hold dollars in their reserves. Japan needed dollars to buy oil. Europe needed dollars. China needed dollars. Every industrialized nation needed dollars. This created permanent demand for the currency. The U.S. could print dollars, export them to the world, and get real goods in return. Other countries had to produce goods, sell them to America, and earn dollars just to buy the energy they needed. The petrodollar system made the dollar essential to global trade, even though it was no longer backed by gold. For 50 years, this system held. Until now. June 2024. The agreement expires. On June 9, 2024, the petrodollar agreement officially expired. Saudi Arabia chose not to renew it. This wasn't a dramatic announcement. No press conference, no headlines in major American media. But it was noticed everywhere else. Because for the first time since 1974, Saudi Arabia is free to sell oil in any currency it chooses. And it's already doing it. In 2023, Saudi Arabia began accepting Chinese yuan for oil sales to China. China is the world's largest oil importer. It buys more oil than the United States, and now China can buy Saudi oil without using dollars. This breaks a 50-year precedent. For decades, even if China bought oil from Saudi Arabia, the transaction was denominated in dollars. China had to convert yuan to dollars, buy the oil, and Saudi Arabia received dollars. Now, the transaction happens in yuan. No dollars involved. Other nations follow. Saudi Arabia isn't alone. The United Arab Emirates announced in 2023 it would accept Indian rupees for oil sales to India. Russia, under sanctions and cut off from dollar-based financial systems, now sells oil to China and India in rubles and yuan. Iraq is negotiating yuan-based oil sales. Even smaller producers, Angola, Nigeria, are exploring non-dollar oil transactions. This is a fundamental shift. For 50 years, every oil transaction required dollars. Now, the largest buyers and sellers are bypassing the dollar entirely. Why this is happening? 3 reasons. First, U.S. sanctions. America has weaponized the dollar. Russia was cut off from SWIFT, the dollar-based payment system, after invading Ukraine. This showed every other nation that holding dollars is a geopolitical risk. If the U.S. doesn't like your policies, they can freeze your dollar reserves or block your transactions, so countries are building alternatives. Second, China's rise. China is the world's largest trading nation. It buys more oil, more commodities, more goods than anyone else. And China wants the yuan to be a global currency. Pricing oil in yuan is a step toward that. Third, declining U.S. influence. America's military commitments are overstretched. Its debt is exploding. Its political system is dysfunctional. Saudi Arabia and other oil producers no longer see the U.S. as the indispensable partner. They're hedging, diversifying, preparing for a world where the dollar isn't dominant. The BRICS alternative. In August 2023, the BRICS nations, Brazil, Russia, India, China, South Africa, announced they're developing an alternative currency for trade. It's not launched yet, but the intent is clear. Create a currency that isn't controlled by the United States. Use it to settle oil and commodity trades. If this happens, the petrodollar becomes irrelevant, and the dollar loses its structural demand. When oil is no longer priced in dollars, 3 things happen. 1. Dollars flood back to America. Right now, trillions of dollars sit in foreign central banks and reserves. Countries hold them because they need dollars to buy oil and settle trade. But if they don't need dollars for oil anymore, they don't need to hold as many dollars. So they'll sell them. Convert dollars to yuan, euros, gold, or whatever currency they do need. And where do those dollars go? Back to the United States. This increases the domestic money supply. And when the money supply increases without corresponding production, you get inflation. Prices rise. Your cost of living increases. Your savings lose purchasing power. 2. The U.S. can't run deficits forever. The petrodollar allowed America to run massive trade deficits. We import $800 billion more than we export every year. Normally, this would collapse a currency. But because other countries needed dollars for oil, they kept accepting them. Without the petrodollar, that changes. Foreign nations won't need to accumulate dollars, so they'll stop accepting them at the same rate. The U.S. will have to actually balance trade. Export as much as it imports. But we don't produce enough to do that. Our manufacturing base is hollowed out, so either we rebuild production, painful, slow, expensive, or we face a currency crisis. 3. Interest rates and debt costs explode. The U.S. borrows $2 trillion per year. We sell treasury bonds to foreign buyers. and they buy them because they need dollar assets. But if they don't need dollars anymore, demand for treasury bonds falls. Lower demand means higher interest rates. The U.S. has to pay more to attract buyers. Right now, the U.S. pays about $1 trillion per year in interest on the national debt. If interest rates rise just 2%, that cost doubles to $2 trillion annually. That's more than the defense budget, more than Social Security, more than Medicare. The entire federal budget gets consumed by debt service, and the only option is to print more money to pay it, which causes more inflation, which drives more countries away from the dollar. It's a death spiral. The transition is already visible. The dollar's share of global reserves has fallen from 72% in 2000 to 58% in 2024. That's $2.5 trillion shifted out of dollars into other currencies and gold. Oil-producing nations are signing trade agreements in local currencies. Central banks are buying gold at the fastest rate since the 1970s. The transition isn't coming. It's happening. And most Americans have no idea. Could the U.S. reverse this? Could we restore the petrodollar? Theoretically, yes. Practically, no. The deal is broken. The petrodollar was a deal. The U.S. provided security. Saudi Arabia priced oil in dollars. But the U.S. can't provide the same security anymore. We're overextended. 750 military bases. Commitments in Europe, Asia, the Middle East. We can't defend everything. And Saudi Arabia knows it. They're buying weapons from China now, signing security agreements with Russia, diversifying away from dependence on America. The leverage we had in 1974 is gone. China offers an alternative. China is now Saudi Arabia's largest trading partner, bigger than the United States. China buys Saudi oil, sells them goods, invests in Saudi infrastructure. And China offers something the U.S. doesn't. They don't lecture about human rights, democracy, or politics. They just trade. For Saudi Arabia and other oil producers, that's more attractive than U.S. pressure and conditions. The world is multipolar now. In 1974, the U.S. was the dominant power, the only option. In 2026, the world is multipolar. China, Russia, India, the EU, all have influence. Oil producers can play these powers against each other. They don't need to rely on one. The unipolar moment is over, and with it, the leverage that built the petrodollar. For 50 years, the petrodollar made the dollar essential. Every barrel of oil sold required dollars, so every country needed dollars, and the U.S. could print currency and exchange it for real goods. That system ended in June 2024. Saudi Arabia didn't renew the agreement. They're accepting yuan for oil. So is the UAE. So is Russia. So are others. The structural demand for dollars is disappearing. And when that demand vanishes, the dollars held overseas come flooding back home. Inflation, higher interest rates, currency crisis. This isn't theoretical. It's already happening. Dollar reserves are falling. Oil deals are shifting to other currencies. Central banks are buying gold instead of treasuries. The petrodollar kept the dollar dominant even after gold backing ended. Now the petrodollar is dead, and the dollar is just paper, backed by debt, printed in unlimited quantities, and losing the one thing that made it essential: oil. If this showed you why the system that kept America's economy afloat for 50 years just collapsed, subscribe. Because the petrodollar is just one piece. The reserve currency is dying. The debt is unsustainable. The empire is overstretched, and I'll show you how each piece connects, and what happens when they all break at once. The transition is happening now, quietly, systematically. Subscribe, because by the time it's obvious, it'll be too late to prepare.